See the world from above.
When global chaos strikes, major geopolitical panics systematically shift massive amounts of wealth from the panicked masses directly to prepared institutions. A modern military conflict between the US and Iran would trigger absolute terror across the global markets. Retail investors typically react to this volatility by selling their entire portfolios at the bottom, allowing them to liquidate their holdings at a massive loss. While individuals panic, hedge funds execute a pre-planned rotation of capital, moving billions into specific strategic positions. Profiting from a geopolitical shock requires abandoning emotion to track the literal flow of institutional capital. Capital fleeing the stock market seeks immediate refuge in safe haven assets. Physical gold and specific cryptocurrencies like Bitcoin act as the primary targets for these massive institutional inflows. Success depends on recognizing this rotation early. Buying these assets before the institutional volume arrives allows you to capture the price increase as their money enters the market. In a Middle Eastern conflict, the focus shifts immediately to the physical warfront. The global energy supply chain has a critical geographic vulnerability, the Strait of Hormuz. Roughly 21 million barrels of oil flow through this shipping corridor every single day. That volume represents 20% of the world's entire daily oil consumption. If Iran blockades the strait, crude oil prices would instantly spike past $150 to $200 per barrel. Institutions use energy ETFs, investment funds that track a basket of energy stocks, and oil futures, which are contracts to buy oil at a set price at a later date, to capture this volatility. Positioning capital in these vehicles before the blockade reaches the mainstream news cycle creates the opportunity for massive asymmetrical returns. Beyond the physical choke points, a second digital frontline opens simultaneously. The 2010 Stuxnet virus provided the first historical proof of how devastating this invisible war could be. The US and Israel deployed malicious code designed specifically to cripple Iran's nuclear centrifuges. These target facilities are sprawling and complex, demonstrating the magnitude of disruption a digital attack can achieve. Modern kinetic wars are now preceded and accompanied by massive cyber warfare campaigns. Defense contractors and specialized cybersecurity firms like CrowdStrike or Palo Alto Networks are the primary beneficiaries of this shift. As physical missiles fly, billions in government defense contracts flow to these firms, causing their stock valuations to surge despite the broader economic panic. Once the initial shock of war sets in, the attention moves to the macroeconomic fallout. The terror of war typically results in a widespread, indiscriminate crash across the broader stock market. This crash creates a temporary, fear-driven discount on index funds and blue-chip tech stocks, which are shares in massive, financially stable corporations with a history of reliable growth. While middle-class investors lock in losses by selling at the bottom, smart money executes its final move. Institutions take the massive profits harvested from their earlier gold and oil plays and use them to buy up the distressed, discounted broad market. This rotation, from safe havens to crisis commodities, and finally to discounted equities, completes the anatomy of a geopolitical wealth transfer. Preparation outpaces panic in every geopolitical shock. You must define your own positioning before the next global crisis begins. Share your specific investment strategies for times of conflict in the comments below. For continued access to elite...
See the world from above.